Hello all, you're welcome to my YouTube channel, and in this video I'm going to be teaching you exactly how to start trading the forex market as a beginner. Okay, and this video is a very detailed video. It's something a lot of guys would actually want to sell to you hundred or even thousands of dollars, but luckily you're going to be getting everything here for free. I'm going to teach you how to start trading as a beginner. I started trading a few years ago when I actually, want to start making money on the internet. And I came across this guy's video that just popped up my screen on YouTube. While I watched this video, it actually introduced me to the basics of trading. And that was how I started my journey, which is the same thing that's about to happen to you right now. You're about to start your trading journey if you're watching this video. I'm a guy who have been working for a company where I've been paid about $20 monthly before I start trading. And with the grace of God, since when I've started to trade to now, I've actually achieved a lot of things. I was able to buy myself a car. Actually, I haven't gotten a home yet, but I'm working on getting a home. And I've actually built a family. I've got married from this trading. And everything I've been doing right now in my life has been impacted by this trading. As you can see, this is my beautiful family. So you also gonna start your life right now. One of those reasons why you need to watch this video to the end is you're only not gonna learn how to start trading as a beginner. Okay, you're also gonna learn how to, you know, trade without your actually capital. You can trade with other people's money, and that is one of those things I'm actually going to be telling you in this video. So make sure you grab a pen, sits right on the screen, and note down everything I'm about to tell you in this video. So let's dive in. Have you ever wondered when you hear about people trading the financial market, when they say I trade Forex and all of those things? Now, I want you to understand that trading is just the same basic things you know. When someone tells you he's a trader, you basically know that that person is actually buying and selling. So this is the same thing that's happening in the financial market. So how do you buy and sell in the financial market? We're going to be diving into that too. Now, why I think this is going to work for everyone is because I've tried it and it has actually worked for me. And one of the major things I want to understand about this is trading is actually user friendly. Okay, for a beginner, it is actually friendly. Anyone can learn how to trade. No matter how dumb you are, you can learn how to trade because it is very simple to operate. I mean, the interface are very user friendly. You can actually learn it very easily. One of those things you got to understand about trading is it is actually different from every other online opportunities you want to talk about, because I looked into drop shipping. If you want to start a drop shipping business, you need money to start a drop shipping business. If you want to start blogging, you need money to buy your domain, you need money to buy backlink and a lot of things. So tell me which ever online business you want to do that you don't need money to start up with. None, except for trading, because trading actually has an interface that help you trade like you are trading a real money. Meanwhile, it is called a demo account. So what is a demo account? Demo accounts can actually give you up to $100,000 or even more to actually trade the financial market to see if you're ready to start trading with your real money. Dropshipping is not going to give you a demo, or, blogging is not going to give you a demo. If you want to start blogging, you just have to go in with your real money, get your domain, and start, blogging or dropshipping or any other online business you want to talk about. But for trading with your demo account, you can actually trade the market exactly as if you are trading your real money. The only thing you can do on demo account is you can withdraw your profit, and your loss is not actually your real loss, but that means it's actually the same thing that's going to happen if that was your real money. So let's start by asking ourselves, what is the definition of Forex trading? From the name implies, I've talked about trading initially. I say trading is all about buying and selling. When I talk about Forex, it basically means foreign exchange. So whenever you are trading Forex, if you're a Forex trader, that is, you are trading a Forex exchange, okay? You're trading a foreign exchange, which basically means you're trading euro against United States dollars, or you're trading Canadian dollars against Japanese yen on all of those things. Now, you need to understand that trading is the largest financial market in the whole world where you can trade 24/5. I mean, you can trade 24 hours for 5 days in a week. So it is open, and this is one of the reasons why you can actually trade even if you are uh, maybe if you have another job or you have something else doing, because we have three session in trading. We have Asian session, we have the London session, and we have the New York session. So if you want to be a trader and you have other side hustles you're doing, or you have a job you're doing, it doesn't stop you from being a trader. This is one of the beautiful things about trading. So we have some key terms you need to understand in trading. We have pips and we have lots. So let's first of all start talking about pips. Now I'm going to be using XAUUSD, which is a symbol for gold, as my basic explanation for pips. Now when you look at XAUUSD, let's assume the market is at 1300. Okay, so it's always going to have a decimal point. Okay, you may have 1300.00, or you may have 1300.10 up to 90. Okay, and we all know that decimal points actually stops in 9. So if you're about to have a round up decimal point after 9, that's gonna be a new digit. Okay, so if you have 3100 in the beginning and it goes to 3100.9, the next thing you're gonna have is 3101, okay, 0.0. Okay, that decimal point is gonna actually change to a whole number, and it's gonna give the whole number an additional 1. So what is this pips exactly? Now when we say XAUSD is on 1300.00, that means you're on 0 pips. So when it moves to 1300.10, that means you're on 1 pips. When it moves to 0.20, you're on 2 pips. 0.30, you're on 3 pips, until 0.90. So when you have 1300.90, you're on 9 pips. All right, so when you have 1301, so the 9 is definitely going to change to a whole number, and that's going to be 1301.00, and that is 10 pips. So logically, when your whole number in your XAUSD increases by 1, you are basically having a 10 pips in addition. So this is one of the terms you need to understand in the beginning of trading. Now, one of those things you also need to understand is what we call lot size. I'm starting to tell you all of this because these are the most hardest parts of trading, and if you actually don't have the basic understanding on pips and lot size, you are more likely to actually lose your money if you start trading the financial market. So lot size is actually the volume you use to trade. Okay, so each pair is having a minimum lot size. Okay, so when I say pair, you need to understand that pair is when you have two commodities together, or when you have two currencies together. When you have euro and you have USD and you're about to trade them against each other, we call it a currency pair. Okay, so whenever you're trading a pair, all of these pairs has actually a minimum lot size. Okay, but I'm going to be emphasizing on gold because gold is one of the most easiest pair to actually teach anyone to trade the forex market. Okay, so the XAU under the gold stand for gold, while USD stand for United States dollars. So when you're trading XAU-USD, it basically means you're trading gold against United States dollars. I hope you understand that. Now that is what basically mean by a pair. So each of this pair has a lot size, a minimum lot size. So I think for gold, the minimum lot size is 0.01. Okay, so let me show you from the screen. When you have a 0.01 lot size and each pips moves, okay, it moves in 0.1. okay, each piece that moves is the equivalent of what you're going to be having as profits if the market is going your way, or what you're going to be having as loss if the market is going against you. So each 10 pips is going to be exactly $1 if you're using the lowest lot size on gold, which is 0.01. And if you're using 0.1 on gold to trade, each 10 pips is going to be $10 profits if the market is going your way, or $10 lost if the market is going against you. And if you're using a 1.0 lot size, that's going to be $100 on each 10 pips, okay? On each 10 pips, that's going to be $100 profit if the market is going your way, and it's going to be $100 lost if the market is going against you. So you can actually determine what 10 pips is going to be to the volume of what you want to trade. So if you have 10 pips, definitely you're having a $1,000 profit or loss, depending if the market is going your way. I believe you understand how to calculate pips properly. This is how easy it looks to calculate your pips. So let's talk about why Forex is great for beginner, okay? With just your smartphone and with 0 accounts, you can start learning trading, okay? And a lot of brokers will even allow you to trade with $5. That means when you're ready to trade with your live account, even with $100, you can start trading the financial markets. Like I said earlier, it has a flexible time. It doesn't matter if you have a job or you have a different side also you've been doing. You have 3 major different sessions you want to trade. So you're going to look into the sessions to, confirm which of the session is not going to clash with maybe your job or any of the side also. So we have the Asian session, which in my Nigeria time, your Asian session is basically during the midnight, okay? And your London session is actually during the morning time at about 8 a.m. to 9 a.m. That's when your UK session begin in Nigeria. Now, the common fear about trading is that a lot of people think trading is actually hard because of the graphs. It's all about charts. You need to read this chart. It has graphs, and you need to, look at those graphs and determine that you want to trade. And I believe a lot of people have been talking about their losses on the internet, and this is actually bringing fear to a lot of people's mind. And I'm going to have to tell you that you don't have to be a mass genius to start trading the Forex market. Like I said in the beginning, even the dumb-based person can learn how to trade. So take out the fear in your mind, get ready, and be sure that you want to start trading and make money from the financial market. Now, we're also going to look at picking the right tools, okay? For you to trade, you need to understand that we have what we call a broker. So what does a broker mean? Let's look into that. Now, a broker is the intermediary between you and the financial markets. Just the same way you have your local bank and the same way you have international banks. If you want to trade with someone or you want to trade with any other company, you need a bank to transfer your funds, to wire your funds, and all of those stuff, all right? So that's the same way your broker works. Your broker works in such a way that it's where you actually have to fund your account. So when you trade and you want to make your withdrawal, you're going to make this withdrawal from your brokers, okay? Now, it is also very important for you to make sure that you choose the right brokers, okay? So if you're in Africa or Nigeria particularly, one of those brokers that is very good for you is HFM, OttaFS, and SNES. So I'm going to drop the link to register to any of this broker. If you wish to, sign up for it, you can use the link right in the description of this video to get registered. If you're registered, I'm going to get paid per pips you trade, okay? I'm going to have to be sincere with you. That's one of those things I do here. I need to tell you everything you're doing step by step so you can trust me and you can also trust the system. Now, one of those apps you're going to get familiar to is called MetaTrader, okay? We have MetaTrader 4 and we have MetaTrader 5. So you might be hearing about MT4 and MT5. This is the major tool you need to start trading, okay? So when you go to your Google Play Store or you go to your Apple Store, you can actually download MT4 or MT5. I know you might be curious that what is the difference between MT4 and MT5. I'm going to tell you that in this video. Now, MT5, as the number implies, 5, is the upgraded version of MT4. So MT5 is going to actually, allows you to make some bulk operations. Like if you want to close your trades, you have about 5 or 10 or more than that. If you have high number of trades open and you want to close everything on the spot, MT5 is going to allow you to do bulk operation. But if you're an MT4, you have to close those operations manually. I think this is one of the major difference between your MT4 and your MT5. So make sure right now you're getting ready to download your MT4 and MT5 on your Apple device or your Android device. MT5 is also the platform that allows you to place your trade, to place your buy or your sell trade. Okay, now this is where the determination of everything you want to do lies. Whenever you have your analysis, you want to buy and you want to sell, you go directly to your MT5, and right here you can click on buy if you've confirmed that you're going for a buy position, and you could go for a sell if you've confirmed your selling position. Okay, and if you want to open a trade, you can just go right here and you can just click on buy or sell. So right here at this points right here, if you want to close your trade, you can swipe it to the left side and you click on this tick side and you can close your trade. That's how simple how you can actually operate the MT4 and MT5 platform. Like I said earlier, you have a demo account that's going to help you to trade without having to risk any of your money. I think this is one of the beautiful thing about trading. You got a demo account that's going to help you to trade with no stress. You can actually trade like you're trading your real money. You have up to $100,000 to trade, which is not your real money, but you can actually trade the real financial market. Only that you can't withdraw this money and it's not your loss if you are in real loss. Now, I got to warn you about red flags. Any brokers that promise you about quick reach, not even a broker, if anyone promises you about about getting rich quick in Forex trading, you got to stay away from people like this. You got to take note of this, okay? If you're watching this and you have a notebook, make sure you take a close look about this. If anyone or any broker is promising you a quick reach in Forex trading, you got to run away from them. I hope you get that right. Now, after you've understand all this basics of trading, let's look at strategy. I know a lot of people must have been talking about strategy, which is actually your ultimate friend, okay? If you want to start trading, your strategy is your ultimate friend that's gonna, help you stay in the market. You need to have a strategy, okay? You can't just come in and decide that, okay, today you want to buy, today you want to sell. No, you need to have a strategy. So we're going to be looking at one of those major strategies that works universally. So firstly, let's look at breakout. What does it actually mean by breakout? So whenever you have a market that is going this way, maybe maintaining this particular position, and when the market breaks above this line, it is what we call a breakout. Or when you have a trend, if the market is going to the upside and you are assuming your line that you need the market to keep rejecting on that level, but the market, exceeds that line, that's one of what we call breakout, and that's simple. So whenever you have a breakout, you take positions on the direction that market is actually going to. So understanding breakout, you need to understand it in two different aspects, okay? Because the market structure is actually two structure, okay? We have trend and we have consolidation. So under the trend, we have uptrend and we also have downtrend, okay? So whenever market is going to the upside, okay, we call it an uptrend. And when market is coming back to the downside, we call it a downtrend. So whenever you have an uptrend and your line is being drawn this way, but unfortunately the market crossed through that line, we call it a breakout on a trend, okay? So the same thing is going to happen if your trend was a downtrend and your line was being broken by the market, we call it a breakout. So the last one is consolidation. And consolidation is just the same thing as a ranging market. So what do we mean by a ranging market? Where a market is neither going consistently to the upside or neither going consistently to the downside, we call it a ranging market. So this is where support and resistance level comes in. I know if you have been watching videos or reading a few articles or ebooks about trading, you must have heard about support and resistance level. So this is where support and resistance level comes in. When you're having a ranging market and the market is rejecting at a particular level at the upside, we call that upside a resistance level. Simple. And when the market is rejecting from the downside, we call that a support level. So when market breaks above your resistance level to the upside, it's basically what I mean by breakout. And when it breaks downside to your support level, that is also called a breakout, which is very simple to understand, right? So we trade when markets breaks to the downside, we trade for a sell. When market breaks to the upside, we trade for a buy. I believe you're understanding all these simple terms to trade like a beginner. So let's look at the next thing we need to understand. There's something we call risk management in trading, okay? If you want to start trading, you need to actually know that trading is risky, okay? So anything you want to do and you have to put in money there to do that thing, you should know is actually a risk. I believe any business you're doing is actually a risk. So you should understand that trading is risky, and whenever you lose your money, you're never going to get it back, okay? Except you make profits. Whenever you lost your money to the market, it's gone. There's no way you can owe accountable to that, not even your broker, okay? So that is why risk management is very important, okay? So when we're talking about risk management, this is where you have to apply the lot size we've talked about in the beginning of this video, okay? If you have a low, capital, you want to trade with the smallest lot size that particular pair might actually allow you to trade with. Now, you also need to understand that whenever we are trading, there's something we call risk to reward, okay? We call it R ratio R, okay? You want to trade 1 to 2 weeks to risk to reward at least, okay? So whenever you want to go for a trade, there's a particular amount you are willing to risk, okay? So if you're willing to risk about $2, then you should be targeting $4 as a profit, okay? That is 1 to 2 risks to reward. So if you have 3 trades, you lose 1 trade, okay? That's you lose $4. The next trade is going to give you twice of what you've lost. So you've made $4. That's you've made an extra $2. And if you win the third trade, that's going to be an extra $4. So if you lose a trade, risking $2 in a day, so you're definitely going to make $6 at the end of the day. So if you're risking $200 in a day, you are looking into making $600 on that day, okay? This is just a basic example. I'm not telling you can do this in a day. It depends on what capital you're using to trade. One of those things you need to understand about risk management is stop loss and take profit. Like, it is beautiful to trade because trading has actually give you every measures to make sure that you're not losing money to the market. Now, if you lose money to the market, that is basically your mistake, okay? Maybe you've done something wrong. Now, trading gives you the room to set a stop loss and a take profit. So you don't have to be on your PC or on your phone 24/7, okay? When you have your trade, you can actually set how much you're willing to risk and how much you want to take as a profit. So to set a stop loss and take profit, when you go to your MT5, when you are about to take your trade, okay, or you can actually set a stop loss or a take profit in 2 different dimensions, okay? So let's look at how to trade to set a stop loss manually, okay? So to set a stop loss, you can actually decide on what particular pips you want to close your trade. I've explained what pips mean in the beginning of this video. So if you're not getting it right, we can go back and watch that video. It is very simple, okay? So I told you if you're using your smallest lot size on XAUUSD, each 1 pips, each 10 pips you're having is $1, okay? So each whole number changing, increasing by 1 is $1, okay? So if it's reducing by 1, it's also $1. So depending on if you're buying or you're selling, so you can use that to actually determine your stop loss and take profits. If you want to take a trade on 3001, okay, and you want to reach about $2 on the smallest lot size. So if you're taking a buy position, your stop loss is going to be below, okay? You want to stop the market if it's going against you. So you just want to calculate the next 2 whole number going, below as a stop loss, okay? And you want to calculate the next 4 numbers going above as a take profit if you're buying, okay? You can set that as a take profit and set the other one as a stop loss, and vice versa if you're also taking a sell trade. So this is how simple you can actually set a stop loss and take profit. I'm going to have to tell you the facts, okay? If you want to start trading, you've made a very good decision in your life. All you have to do is to make sure that you take every step that I just told you in this video, okay? Make sure you take every single steps, and Whenever you heard someone telling you about getting quick rich stuffs in trading, even if it's a broker or person, I want you to run away from such person because they are actually going to lie to you. So I want you to feel empowered. I want you to know that you're about to start a journey that's going to change your life completely. Now, let's look at what you shouldn't do as a trader. This is very, very important. You need to actually make sure that you take your time to watch everything that I'm about to tell you. Now, there's something we call information overloaded. There's something we call overdrafting. There's a lot of things you shouldn't do as a trader. Okay. Now, let's look at information overloaded. When you watch too much videos, when you have too much mentors, when you read different books, we have different perspective about trading. We have different styles of trading. We have different instincts, different way we look at the market. Okay. So when you hear from me, you hear from the other guy, you hear from this guy, you hear from everybody on the financial market, you're going to be overloaded with information. And that's not going to help you because at the end of the day, you're not going to get it right. You have too much information. This guy tells you to buy whenever you see this, and this guy tells you to sell whenever you see that same thing. The trading market is funny. Okay, sometimes you can go buy for real, sometimes you can go sell for real. But what is your consistency in trading? Okay, that is why I don't want you to have too much mentors. Okay, when you have one single person, you are actually understanding properly. If one person is giving you the information you need, stick within. Okay, we have different types of concepts you might want to follow. Okay, you might want to follow ICT concepts. You have a lot of concepts, HORC. We have a lot of them. Okay, support and resistance. We have so many concepts you might actually want to follow. We have fair value gap concept and all of those. So if you want to choose any of these concepts, have a mentor and make sure that you follow it properly without getting too much informed. Now, overdrafting. Whenever you are trading, okay, if you're going for a buy position and you are assuming that this market is going against you and you want to quickly have some other position, so when it start going your way, you want to make profit, most of the time is gonna kick you out of the market. You're not gonna make profit, okay? Or maybe probably the market is going your way and you felt overwhelmed and you still want to add more positions to it. That way it can actually stop you from making money from the market. So we have to stick to, being disciplined, okay? You have to stick to being disciplined. And one of those things I'm also gonna tell you directly from my story, okay? I'm gonna tell you my story to actually not to do some things in trading. If you have a job and you just want to start trading, I'm going to advise you not to leave your job, okay? Because you're going to go through a lot. This was one of those things I did, which I actually went through a lot before I, later got the balancing, okay? Well, how many people can go through what I actually went through before being to this level I am today? So you just have to be very careful out there. You need to make sure you do not make consistent mistakes. You need to make sure you have a plan. Stick to your plan, okay? If you're trading during the New Year session and that's your plan, you need to make sure you only trade during the New Year session, okay? If your risk to reward is 1 to 2 risks to reward, okay? No matter what you're seeing in the market, okay? You want to stick to your plan, all right? And if you are having a loss in the markets, okay? You need to have a particular amount of money you're willing to risk on every trade, okay? Let's assume you want to risk about $5 every day, okay? If you're in the market and you've lost $5 already, I want to give up. You shouldn't have the mindset that you want to make that money back that same day because most of the time it's going to actually kick you off the market. So don't try that. Don't try to do all of those things. And don't try to borrow money from, from loan apps or from banks because you want to trade. No, you don't do that to trading, okay? Emotion is going to come in. And that is the most hardest part of trading, psychology. When emotion comes into your trading, you are more likely not to make it in trading, okay? I believe you know now what Forex market means, how to start trading Forex market, and how to avoid mistakes.